So some of these economic agents are more equal than others, and it's usually the poor, and it's usually the people that are not well organized, and it's small businesses that really are on getting the short end of the stick here.
The Reserve Bank's latest rate hike of 50 basis points was expected by some economists, but also caught many off guard, given how long the hiking cycle is now persisting. Joining me to unpack the inflation rate story, as well as the drivers of inflation, is the chief economist at the Efficient Group, Dawie Roodt. Dawie, thanks very much for being with us once again on the CRA channel. Always a pleasure to get to talk to you. Just in a nutshell, recently you wrote an article for Business Times, to which we will link in the description below. I wanted to unpack the sort of ideas and thoughts in that article. But to start off with, we've got the Reserve Bank continuing to hike rates, wanting to get a bit of a handle on inflation. Inflation that somewhat eased in April, so a little bit of good news if one really wants to look for those in some ways. Where do you think the Reserve Bank is heading sort of going forward? Is it going to consistently hike? Do you see a pause coming anytime soon in their reasoning in terms of what the Monetary Policy Committee has said?
I think, well, let me just make a starting a very important comment, and that is that inflation is bad. We can debate it and we can talk about it, but let's just accept that inflation is very, very bad. And inflation is much worse, long-term inflation, than high short-term interest rates. So let's just accept that for a moment. All right, let's just understand what's going on. We have inflation currently in South Africa. There was a bit of a slowdown in the rate of inflation to 6.8%, the most recent numbers. There are some technical reasons and so on, but the reality is inflation in South Africa is still too high. It is far too high. Well, the Reserve Bank has got a mandate to make sure that inflation remains between 3 and 6. So currently it is above that. So that simply means, and reading and witnessing what Lesetja Kganyago has been doing the last couple of years, I think that the Reserve Bank will maintain a strict monetary policy. And we should talk about strict monetary policy because this is not very strict, but it is slightly tightening. So we've got a monetary policy that is slightly tightening, and they will continue to do that. I think if inflation accelerates again, and there's a possibility of that happening, in the short term, I believe inflation will sort of remain at these sort of levels or maybe come down a little bit. But in the medium, longer term, I think inflation is going to become a big problem in South Africa. And inevitably, the Reserve Bank, under the leadership of Lesetja Kganyago, will continue to increase interest rates and try to see if they can force inflation lower. But the problem is that the Reserve Bank is only one macroeconomic policy instrument available to the authorities to affect something like, for example, inflation. There are many other levers that the authorities can use as well to get inflation lower. And I'm afraid to say that the Reserve Bank is probably the only authority at the moment. Monetary policy is the only policy instrument at the moment that is really trying to get inflation lower, while the rest of the policy instruments are doing exactly the opposite. So I'm afraid to say, yes, interest rates are likely to remain high and maybe increase even further. And the inevitable result of that will be very weak economic growth.
Dawie, in your article, you mentioned this idea of weaker economic agents, and this idea of passing on price increases up until a certain point. So when the fuel price increases, when there's supply chain bottlenecks, businesses across the board, across value chains, across supply chains, they have to deal with these prices, these increases, somehow factor them into their daily operations and pass them on eventually to consumers. So you mentioned a few examples of certain groups of people who are, protected from these consequences. Can you highlight that a bit and just how this factors into your thinking around, the fight against inflation?
Inflation is not an event. Inflation is a process. So the increase in the petrol price, and I use that, I think, as an example, is not inflation. The petrol price or increase in the petrol price only becomes inflation once it becomes a process. So it's easy to understand how it works. I mean, there's the increase in my petrol price, for example. I don't want to take the pain on my bottom line. So I increase the prices of my goods and services to you. You don't want to take the pain, and you pass it on to somebody else and pass it on to somebody else. So it becomes a process. So inflation is a process whereby prices keep on increasing. That's one definition. Or the inflation is a process whereby your currency loses its value. That's another definition, but it says basically the same thing. And that is exactly what the Reserve Bank wants to stop. The Reserve Bank does not want this process to take hold in the economy, and they do that by increasing interest rates. Now, interest rates is a very blunt instrument. Interest rates harms the economy. Interest rates, what it basically do, it reduces the demand for credit in the economy, And credit or money is the fuel that keeps inflation alive. Some people are more equal than other people. So, for example, if I want to increase my prices to you and I belong to a trade union that's a militant trade union, I can simply force you to accept my price increase. You can't necessarily do that because you don't belong to a militant trade union, or maybe you're poor. You don't have a choice. You don't have any standing, you know, no economic or political muscle, and you are forced to take that price increase as an example, and you are worse off, but I will be better off. Now, there are many examples of that. Eskom is an excellent example. So Eskom increased electricity prices by 18%. We don't have a choice. If you want electricity, you pay 18% or you stay without, because there's no proper competition. Eskom employees, they got an increase, last increase of 7%. They are demanding another huge increase. And if you don't give them the increase, they're going to break stuff and they will, you know, sabotage the power stations and stuff like that. So we don't basically have a choice here. So some of these economic agents are more equal than others. And it's usually the poor, and it's usually the people that are not well organized, and it's small businesses that really are on getting the short end of the stick here. And that's the reason why we have inflation. And that's the reason why the Reserve Bank will keep on increasing interest rates, not because they want to harm us, but because inflation is such a bad thing. But I'm afraid that the forces, the negative forces that the Reserve Bank is currently facing are so huge that I'm not sure that even the Reserve Bank will be able to get inflation lower eventually.
Dawie, when we had the latest rate hike, the one of 50 basis points, when some expected 25, I think some markets were hoping for and expecting up to 75 or even 100. You had some commentators saying that the rate hikes are weakening the rand, and I just want to question that a little bit if this view is correct or not. So the idea that the rate hikes are weakening the rand, where I think the local policy decisions maybe have a built-in weakness for the rand. Yes. So it's exposing it a bit more. And just if you can talk a bit about the rand strength versus the dollar, that sort of impact of the policy choices.
Yeah, what happened is that maybe just a theoretical background. When interest rates are increased in one country, that your country becomes more attractive. That country becomes more attractive because they're paying more interest on deposits, as an example. That's a simple example. So an increase in interest rates in one specific currency usually results in that currency appreciating against other currencies. So when the Reserve Bank made this announcement of a 50 basis points increase, one would have expected that the rand to remain basically the same, the exchange rate of the rand, because the market pretty much expected this already, or that the rand will actually appreciate against the US dollar. And that did not happen. Exactly the opposite happened. The rand completely fell out of bed. Why? Because that's not supposed to happen. And I was thinking about this, and the only answer that I can come to is that listening to the governor of the South African Reserve Bank and listening to his question and answer sessions after the speech of the governor of the Reserve Bank, it is very clear that the governor painted a very, very dismal picture about the South African economy. And he also mentioned that he thinks that the rand is vulnerable, the rand can come under even more pressure. And I think that is actually the thing that spooked the market. So I think he spooked the market, not the change in interest rates, but the things that he said about being concerned about the economy and actually mentioning the exchange rate of the currency and all that. And I think that's the reason for the rand coming under pressure. I think if the Reserve Bank haven't started relatively early in the cycle to increase interest rates, I think if the Reserve Bank did not give this last 50 basis points increase, and he did say the things that he did say, then I'm afraid the rand would have traded at in excess of 20 or whoever knows to the US dollar, for example. So no, I don't think it's the interest rates change that actually affected the exchange rate negatively at least. I think it's what the governor said. And he said those things. And I think it's important for somebody like the governor of the central bank to say these things and to warn politicians that we are heading for some difficulties, and it is primarily because of the mismanagement of the South African economy by an ANC government.
Thank you very much for watching. A reminder, please, before you leave, to like this video, and please also subscribe to our YouTube channel if you have not yet done so. If you are interested in all of the CRA's work, our weekly risk alerts, our macro reviews, our strategic intelligence reports, as well as our bespoke strategic intelligence briefings, we invite you to become a subscriber of the CRA. Click on the link in the description below, head to our website and explore our subscription options. Until next time, this has been Chris Hattingh for the Center for Risk Analysis. Take care.